A 6-week coil in the silver price, which matches the largest coil since silver squeeze, which means we are within 2 to 3 weeks maybe of a huge move. Could be up, could be down. I think it'll be up. We'll see. But there hasn't been a coil like this since the beginning of 2022, and the last time we saw a coil like this before that was at the market highs of August 2020. And by coil, I mean a very tight wrapping of the silver price. And remember last week when I showed you that there were huge spot buys in January 2023 gold? Well, there were even more of those this week on January 17th and 18th, combined with the deliveries made on the following day. So whoever is buying a lot of spot silver has continued to do it this week and is stepping up the pace. Meanwhile, in the paper silver markets, SLV holdings are falling even faster as the silver price rises. This is happening across all paper silver funds, and I will show you both charts on that. SLV holdings have hit a new 3-year low, which means the paper investors are nowhere to be found. They are not paying attention. We want them out of the market as long as possible. This is all good news. Next, we're going to talk about Japan. The Bank of Japan owns over 50% of the entire Japanese government bond market. The JGB market is a humongous fulcrum in the entire Keynesian system. And when that domino falls, I don't know if it will be the first domino to fall, but when that domino does fall, the rest of the dominoes of the Keynesian system will fall fast because it is a huge one. It all depends on how the market forces the Bank of Japan to release its yield curve control, which it has not succeeded in doing yet, but it is getting closer. And finally, we're going to talk about, remember that situation in the UK and the United Kingdom when the bond market was crashing because of some leverage scheme in insurance and pension funds? Well, the situation is even worse in Japan, which is why the Bank of Japan cannot let go of its yield curve control, because its pension funds and insurance companies that own Japanese government bonds will also crash just like they did in the UK, and the Bank of Japan will have to go right back into the market in an embarrassing 180. This silver report is brought to you by Fortuna Silver Mines, symbol FSM, a stock which I personally own. Earnings came in on January 17th. Fortuna reports 2022 full-year record production of 401,878 gold equivalent ounces and issues 2023 annual guidance. Gold equivalent ounces converts silver ounces to the equivalent gold ounces. So as the gold-silver ratio falls eventually in a monetary crisis to the monetary ratio of 15:1, gold equivalent ounces for Fortuna will skyrocket for that reason. And so just a quick overview of its production. Gold production of 259,427 ounces, 25% increase over 2021. Silver production of almost 7 million ounces, 8% decrease over 2021. Lead production of 34 million pounds, 5% increase over 2021. Zinc production of 46 million pounds, 3% decrease over 2021. So silver, lead, and zinc are basically even, whereas gold production is much higher. For production guidance, gold production is expected to be 9 to 23% higher over 2022 this year. Silver production is going to be a little bit down, 9%. But gold equivalent production is projected to be 3 to 15% over 2022 this year. And so we see Fortuna is turning into a more balanced gold and silver producer, which I believe makes it a more balanced and stable stock. We will see how it produces and how it performs this year. But generally speaking, I believe the mid-tier of gold and silver producers is where much of gold mining resources should be focused, because they are the ones that will benefit the most from an endgame scenario in gold and silver going vertical, which will eventually happen. And so we will start this week off the silver report with what looks to be a 6-week coil in the silver price. This is a weekly chart going back to 2020, and here you see is the lockdown crash, and here is silver squeeze in that black candle. So we're seeing here a coil means that the price is tightly coiled around a very specific range, or a very tight range rather. So we see here, and this coil is 1, 2, 3, counting the candles, 4, 5, 6, 7. It's actually a 7-week coil. I put the wrong number in the title. Well, 7-week coil is even tighter than we see here. The coil was 1, 2, 3, 4, 5, 6, and in the 7th week it collapsed. That was during the recent bear run of gold and silver from March until September. So this actually is the longest silver coil that we've seen since the market top of August 2020. A coil generally means that there's going to be a big move in the very near future. Could be a week, 2, 3, but you don't have these tight coils without the bulls and the bears both fighting intensely to keep their price targets. And once one of them collapses, once one of them gives up, the selling pressure or the buying pressure in whichever direction falls and the price heads in the opposite direction very strongly. I have a feeling that this coil will break up as the last 2 coils broke down. Not this time, I don't think. Zooming in on the coil on a daily chart, we can see here exactly what this coil is. Starting here, you have these very short-lived up and down movements. The price doesn't seem to want to move. There's something holding it up in both directions, and that looks like it will break. Could be next week, could be 2 weeks, but it's going to be soon. This is quite interesting. Moving to the gold market. Last week, I pointed out that there was a single day, I believe it was January 11th, of 1,223 contracts opened of spot gold. Spot gold meaning for immediate delivery, January 2023. That was a huge buy on that day, and all of it went to delivery. Now we're seeing even more of that. When you buy spot, you do not buy futures. It's not for hedging, it's for physical delivery, because once you buy spot, you are risking delivery. You're buying it in the delivery window. And so 1,223 last week on January 11th. This week, January 17th, we saw a day of 603 plus 97. I take this number, the change, and I add the deliveries because the deliveries are closed out contracts, so it should have fallen by 97 since it rose by 603. You add 603 to 97, you get 700. 700 contracts were opened, and the total volume that day was 706, so almost all of that was a big spot buy of 700 contracts. The next day, January 18th, we see even more of that. We see 711 deliveries from that. That was the deliveries from here. There were 700 buys, 711 deliveries. And here we see a change of 313 up, despite 711 deliveries. So that's 1,024 spot contracts that were open on that day, and a volume of 1,027, meaning almost all of them were new contracts opened. What is happening here? Is it the same party that's buying all this stuff? We don't know. We'll see if it continues next week. Here are the delivery numbers. You can see this has significantly picked up since the beginning of the month. This is the January 11th delivery number when that big buy happened, 1,149 deliveries. We see it's even more. The last on January 17th and 18th, the last 2 days that we have reported here, 711 deliveries on January 17th, 1,424, double that basically. On January 18th, something big is going on. We'll see what it is, maybe. Now, to paper silver holdings, they keep falling. They're falling faster and faster as the silver price continues to rise. See here is the rise in the spot price since September 2022, and here for the first time, this is a 5-year chart going back to 2018, generally see as the silver price rises, the holdings on the bottom here of SLV can tend to rise. Here is the big move in 2020 from the bottom at lockdown central until the market top in August 2020. You see the holdings here rose, so it was driven not primarily but largely by the paper silver traders. That is definitely not happening now. We see this huge rise in the silver price, and there has been no response at all by SLV, which is now at a 3-year low in holdings going back to 2020.